All right. Good morning to our friends over in the United States, and good afternoon to you, Nico. Great to have you back here on the iGameX Weekly News. How are you doing today?
I'm good, and first of all, thank you for having me once again. Feels good, first of all, seeing you, the other half of the dynamic duo, letting me shine just a little bit. So thank you, and yeah, looking forward to some interesting topics. How are you? How have you been, Paul, Pierre?
Well, they tried to separate us. They tried to take us apart, Nico. But at the end of the day, here we are again. I'm happy to have you back here. For me, yes, for me, I'm doing
Hollywood
great.
loves
Thank
a
you.
comeback. Hollywood loves a
Exactly.
comeback.
Exactly. Classic comeback story. Classic comeback story. No, I'm great. I'm great, Nico. I'm happy to be back here again. There's a lot of interesting things to talk about today, and I love this weekly news broadcast because it kind of forces you a bit to take that extra step to read the news, go a little bit deeper in the current state of play to understand and so on and so forth, so that we can have an interesting conversation today, Nico. But just to summarize a little bit what we have ahead of ourselves. So from an iGaming's perspective, some interesting news in Sweden this week. Who have the Swedish legislator, the SGA, have introduced a new B2B license, which have been talked about for a very long time. It has been speculated around, and now finally we have the details of this B2B license. This, of course, is interesting. Well, especially from a public market perspective, you have the likes of Evolution, who have been kind of roaming freely in Scandinavia, in Sweden, without paying any taxes. And the question was going to become here, like, are Evolution now obliged to pay taxes, for example, in this new licensing regime, just like the B2C operators are, which they actually won't have to do. So we're going to talk about that a little bit in the episode here today. Number two, as a story, is that the American Gaming Association, they released a study the other day saying that more than $500 billion is illegally gambled via unregulated operators and gaming machines in the United States every year. Quite substantial amount of money. AGA, of course, wants to make the point here that especially the states where gambling and online gambling is not regulated is losing out on a lot of tax revenue, essentially. So we're going to go into that a little bit. Another point here that is interesting is from a Malta perspective. I'm sitting here in our studio in our main office here in Malta. Well, the island of Malta has shut down the public access to the UBO register. So we're going to talk a little bit about why that is, the kind of bigger ruling from a European Union kind of perspective, and what this means as well. Glitnor has been in the news all week this week. They have been in the headlines Monday, Tuesday, and Wednesday. So 3 major stories that came out there. First of all, the announced acquisition of Cafe Rocks, the major affiliate, is not going ahead as planned. Then the next day, Glitnor announced that they are getting into the VC realm by starting their own VC venture. So they will start investing in organizations instead. And today, it was announced that the legendary CEO David Flynn of Glitnor Group is stepping down, and he will continue to join the board at Glitnor. So 1, 2, 3, 3 major stories here from Glitnor this week. If we have time, we're going to continue on here. We don't have that much time today, but we want to talk about a little bit from a macro perspective as well. Sometimes we don't only talk about the exact news of the iGaming industry here at iGaming X Weekly News, but sometimes it's important to take kind of other factors from other industries, so from a bigger perspective into mind here. So today we're going to talk a little bit about the macroeconomic situation and how we think that will affect the ecosystem from an online gambling perspective in the United States. A lot of cash-hungry startups that appeared in the 2020 and 2021 outlier years that potentially are going to have to struggle in order to continue to exist into 2023 and beyond. So we will talk about that. And finally as well, I don't think it has escaped anyone that Disney has let go of their CEO, Bob Chapek, who has been widely criticized for the last 3 years, and reinstated the legendary Bob Iger into the CEO position. Bob Iger, who kind of took Disney from a market cap of $48 billion in 2005 up until $257 billion at his departure in 2019. He is now back at Disney, widely popular CEO, back at the steering wheel here, who will try to basically turn the ship around here. Disney has been facing a lot of challenges in the last couple of years. And how will that affect a potential sports betting deal through ESPN that we have talked about a lot? I know that is a topic that is very near and dear to your heart, Nico. But first of all, Nico, do you want to start by doing your summary here, the 10 in 5 that basically never, ever works? 10 summarized news stories in 5 short minutes. But I'm going to give you another chance today, Nico. Do you think you can do
That's
it?
good. That's good. That's good. Yeah. As I didn't manage it in the past, that's why I had to step down. So fingers crossed, I will do it, and that the dynamic duo will be back on track. So fingers crossed, I will just start and keep me as short as possible.
Yes, let's do it, Nico.
Okay, let's do it. So Aspire Global has been fined with a roughly 240,000 pounds penalty by the UK Gambling Commission, UKGC, for, and that's quite interesting, not running sufficient AML checks on their 6 of their white label partnerships. So there you can actually see that AML is a big topic, and the authorities don't hold back on fining as soon as you just are not doing a good job on this one. Then staying in the UK, Allwyn details exciting UK developments in Q3 ahead of national lottery operations. So first of all, they finalized on their buyout of Camelot, and they just published a quarterly trading update for July and September. A growth of 11% to 960 million, and an adjusted EBITDA of 320 million euro, representing a growth rate of roughly 10%. Still staying in the United Kingdom, we're all desperately waiting for the white paper with the new which the new gambling commission will come out with, and stake limits of between £2 and £5 are reportedly set to be just one of the numbers of reformed lined up to fix what is billed as a catastrophe of online gambling. So we are thrilled to see what will be the final result. Then heading into a different geolocation, Colombia's gambling sector reports 11.2 million, and I'll repeat million, it ain't billion, which is in the YogoNet report, in revenues between January and October. And this is split land-based, representing 22.8 billion pesos, which is roughly $7 million US dollars, to online 21 billion pesos, which is representing 4.3 million US dollars. So there you can see that the land-based is still big in Colombia. Heading over to Australia, Crown records a 635 million loss for the overall, so for the prospective year of 2022, with rising costs in fines and compliance procedures. So with the headlines we had over the last couple of weeks, the Australian Gambling Commission also doesn't hold back as soon as it comes to fining companies. This actually plays a role in the overall statement as well. Heading over to the US, Maryland online sports betting market has launched with 16.5 million geolocations recorded. Shout out once again to our friends from GeoComply, who did a great job as soon as it came down to the state of New York, and the estimates of the numbers. So we also see Maryland doing a great jobs. Still staying in Canada, Kanawaki Council launches legal challenge against the Ontario iGaming laws as well. Nevada marks a 20th consecutive month that the Silver State exceeded 1 billion in total gaming wins. So also for October, the gaming win reaches 1.3 billion US dollar. Then we have quite an interesting story on the M&A sector, which represents that for a total of $300 million, Hyatt acquires Dream Hotel Group. So the Dream Hotel Group includes one of the Dream Hotels on the Las Vegas strips. And last but not least, DraftKings is about to launch a horse racing app called DK Horse for US sports bettors as well. So we can see that even DraftKings is eyeing on different verticals as well. And that's it from my end. Pierre, you're muted. Pierre, we can't hear you.
Oh, sorry. Oh, there we go. Sorry.
Yeah, all good.
Yes, I was saying we could. I think we did it. Nico. I think that was 5 minutes. That's incredible. We have to go back and check the replay and see exactly the amount of time. But well done, Nico. We are.
Thank you.
We are ahead of our game here today. No ring rust today, in other words. And just wanted to say hello as well to the chat who are here. Katie, always great to have you here. And for those of you guys who are have not checked it out yet, Katie is hosting her iGaming Fika, I believe on Fridays on LinkedIn here. So definitely check that out. Lars, Rory, good to see you guys here as well. And hope you guys are doing well out there. Now, let's jump into the first story here today. We don't have that much time, of course, and I'd like to go into the topic of Sweden here and the SGA, who introduced the new B2B license that has been pending for a very long time. The details of this have not been known. We don't know exactly how this is going to affect the B2Bs financially, but here are the details basically. And so the interesting thing is the Swedish licensor, the SGA, they have chosen not to really call this a B2B license, but rather a B2B permit. And the reason for that is they are charging a 5,000 euro fee. Sorry, not 5,000, 11,000 euro fee in order to acquire this permit, and it's valid for up to 5 years. And so that is kind of the one-time payment that you are obliged to make as a B2B. But there is no tax or any other expenses attached to this permit, and that is the good news for the B2B suppliers. The kind of the purpose of this permit from the SCA is that they want to make the unregulated offering less attractive, and by basically not allowing the B2B suppliers to service the unregulated operators, they are hoping to basically asking the B2B suppliers to make a choice. So either you service the regulated environment by acquiring the permit, but then you are not allowed essentially to service unregulated operators with your games. This is a similar approach to the Ontario licensor as well, which with their B2B license that are also kind of asking the gaming providers to take a stance here. So either you can do either or, but not both, basically. And so this is a step from the SGA basically to handicap the unregulated environment somewhat. So I thought that was a quite sober approach. Actually, they are not trying to kind of overcharge the B2Bs and make quick revenue and not think more long term. This is an actual good step in order to kind of curb the unregulated environment a bit. What do you think, Nico?
Yeah, it's as soon as regulation kicks in, first of all, it's always based on the tax regime, because you just want to tax all the operators actually making money in your location, or having the headquarters. And that's why you already pointed it out. They're specifically eyeing on Evolution as the literally a Cinderella story of Sweden besides Spotify, and that's where they're pretty much aiming for, to actually tax something from Evolution as well.
Well, like we said, there is no taxes attached to this B2B license. The only thing that Evolution and other game providers have to do is to pay an 11,000 euro one-time fee, and then they have acquired the permit. No other taxes, as far as we know so far, has been announced at all. So this is practically zero ramifications from a tax or a license fee perspective from Evolution. However, what it may do to Evolution is they have to switch off certain services for the unregulated offering. But obviously there are certain loopholes in the Swedish regulation, which potentially can be exploited by the B2Bs as well in order to still stay active on those pages as well. So so far the B2B license in Sweden, it seems to be very friendly to the B2B operators. Let's say that. Let's jump over to the next story as well, Nico. Basically, I want to jump over to the United States here. So the American Gaming Association, they announced the other day, they released some research that they have conducted where they estimate that more than $500 billion is currently wagered to illegal or unregulated offering each year in the United States. This can be summarized into a 44 billion revenue opportunity that is currently lost in the United States, that is going towards the unregulated offering, which then equates to about 13.3 billion in taxes that could have been won by the states if they, in many cases, if they were even legal options in certain states. A lion's share of this kind of unregulated offering is going to actually retail in-person gaming machines. So in the United States, there's more than 1 million individual gaming machines, and a majority of them are unregulated, actually. So all the gaming machines you see in Vegas, obviously the licensed ones in the United States, but then you have a massive network of gaming machines in bars or in kind of corner stores or whatever you can think of, that are unregulated. And another vertical as well, which is heavily kind of tilted towards the unregulated environment, is iGaming, actually. So in the United States, and we're going to pull up a chart here for those of you who are watching in 1 second. So you will see here, if we pull this chart up, you can see here exactly how the unregulated versus regulated revenue stream looks like. So first of all, you can look here at the gaming machine revenue, where you can see it's about 50-50 between the licensed and unlicensed expected revenue. But then when we jump over to the third bar here, you can see iGaming revenue, which is something like 75% of all estimated revenue from iGaming or online gambling, so the online slots activity and so on, is generated from the unregulated offering. So you have obviously the likes of Bodog, the likes of Stake.com, Roobet, so on and so forth, the traditional crypto casinos that we hear all the time. They generate 75% estimated of the total iGaming revenue in the United States today. The reason for that, of course, is that only 5 states in the United States today have regulated iGaming, and the rest are totally unregulated, and the only way for you to gamble online at those states is in the unregulated environment, of course. And then the fourth bar here, of course, is the sports betting vertical, where we can see the opposite, with about 75% of the total revenue generated is within the regulated environment, and about 25% outside of the regulated environment here. So summarizing these charts, you can see that approximately 75% of all revenue, of all gambling revenue, whether it's online or offline, is generated within the regulated environment. So the channelization rate is 75% approximately, according to the American Gaming Association here. What's your thoughts here, Nico?
Yeah, it's as already lined out from your end. First of all, thanks to Katie, that it's 6 states for iGaming already, and 31 plus states where sports betting is actually licensed, and that's where the big difference actually comes from. And she already, or Katie, once again, shout out, that an estimated roughly 580,000 unregulated machines in the US are compared to exactly 870,000 regulated machines, and that's where the big difference actually comes from. And with just 6 already licensed iGaming states, it's pretty easy to sign up at an offshore iGaming offering, a casino, play some slots, play some roulette, whatever. You just need a VPN, and then you're on. As soon as they don't, or as soon as you can just deposit money, withdrawal money, it's all up to you, all up to yours. And that's why you just see actually the big difference. And as you already pointed out, we are speaking about big numbers, $500 billion US dollars. And that's why we're also facing like the big investments. And this is something which we will pick up later on as well during the hour, of companies actually eyeing to get into the big pots of the money, and are spending big actually to get something out of someone else's pockets as well.
Absolutely. It's a bit ambiguous, the 5-6 states in North America. So Katie, correct me if I'm wrong here. Not sure if you are including Nevada as well, which is online poker, but not online gambling. Correct me if I'm wrong here. And I know that the state of Delaware as well, which has legal iGaming under the purview of the state lottery. But I suppose there's 5 states that are like clearly regulated, and then another 2 which are a little bit more ambiguous here. But nonetheless, another as well kind of argument you're saying there's like a massive amount of unregulated gambling machines is American Gaming Association also conducted some studies where they calculated the average RTP of the regulated versus unregulated gambling machines, and they came up with the fact that the regulated machines generally have in Vegas generally have an average of like 93% RTP. So of every $100 you gamble, on average you get back $93. Whereas the unregulated gambling machines, they would have an RTP of only 75%, which is considerably lower, of course. So for every $100 you gamble, 25 goes to the unregulated operator, and 75 back to you, basically. So interesting stuff from the American Gaming Association, Nico. We are running through the agenda here today, and I want to jump over a bit, Nico, to the kind of the main point that we would like to chat about today, which is taking again a little bit more on the macro perspective here, while we are staying on the topic of the United States. In the 2020 and 2021, and I suppose the start of 2022, were kind of outlier years from a macroeconomic perspective, where obviously an extreme amount of money was pumped into the system, which led to an enormous amount of money flying into the VC funds, which in turn competed to essentially fund as many projects as they could. And that in turn led to a very, very vibrant startup ecosystem. And definitely the iGaming industry and the online sports betting industry in the United States benefited from that time, where a lot of really interesting, really exciting, really creative startups emerged during 2020, 2021, and beginning of 2022. However, as we all know, interest rates are increasing as a byproduct to the high inflation, to curb the high inflation. And just the other day, actually, I think it was yesterday, the markets rallied, which is kind of interesting because Jerome Powell, the head of the Federal Reserve in the United States, he made a statement where he basically said that from now on we will expect lower interest rate hikes. So the last couple of months they have announced interest rate hikes of 0.75% per increase rate heightened, basically. And essentially what Jerome Powell is saying is that from now on he expects that the interest rate hikes will be more like 0.5, basically, so 500 basis points. So based on this statement, the markets rallied. Now, there are some pretty interesting statements if you read a little bit more into this statement, which is Jerome Powell doesn't exactly say that we are going to get out of this kind of difficult financial climate earlier. He is actually saying the opposite. He thinks that we will stay in this difficult time longer than expected. And he thinks that the terminal rate, as in the maximum interest rate before you'll see interest rate declining again, will actually be higher than expected. So the previous estimate was about 4.6% was going to be the terminal rate, whereas the estimation today is around 5 to 5.2%. And he thinks that we'll see the terminal rate somewhere in and around May of next year. Previous expectations by many people were that from summer 2023, we were going to see the interest rate coming down. However, the expectation now is more that like towards the end of 2023, that's when we will see the interest rates coming down again. Jerome Powell is very careful in saying that, like, even though inflation decreased in the last report, these are very kind of like unstable reports today, and we cannot take for granted that inflation is actually easing based on just the month-by-month number. We need to see a little bit more history and a little bit more data over time before we can with certainty saying that the increased interest rates are actually having an effect. And so, to put it short, essentially, the the landscape that a lot of the cash-hungry startups are operating in at the moment, which is very difficult. Times right now, it's very difficult to raise capital, of course, and so instead the focus for many of the startups has to be a path towards profitability. But in an environment like the US online sports betting and online gambling environment is like today, the question is there even a path to profitability for many of these startups and smaller operators and B2B companies that are kind of fighting for a chance to integrate into just one of few operators in the next, say, 6 to 12 months or so. And so the question has to be raised here. We saw obviously the other week that the Carousel Group with the flagship brand MaximBet folded. And the reason for that was that they weren't able to raise capital, basically. And so the question is, will we see other operators and suppliers within the US online gambling and online sports betting ecosystem also folding in the near future? What do you think, Nico?
Yeah, it's first of all, once again, shout out to Daniel Gretzer. First of all, giving this kind of cash-hungry environment a shot with MaximBet, so the joint venture with the Maxim and the Carousel Group. So once again, Daniel, good job. Although it didn't work out, but it also didn't work out for even bigger companies. As soon as it comes to refinancing, you have the Series A, B, C, and D. As soon as you just are on the verge of getting from Series A to Series B, etc., you are in demand of fresh money. We have the same story in Germany with Gorillas, which is one of the companies actually guaranteeing you that you can get your day-to-day supplements within a time frame of 15 to 30 minutes. And they had been so cash hungry, they needed to get to finance roughly more than 1 billion and raise more billion. And that's why they now have been pretty much sold already to a competitor with Getir. But getting back to the US, if you just take into account which companies you're actually going toe to toe, it's the FanDuels, it's the DraftKings, it's the BetMGM, and it's the Caesars. So these are companies with pretty deep pockets already. And if you want to compete with them, you just need to enter the market with cash, and like a lot of cash. With the sign up and first depositor bonus of $3,000 in as soon as New York started, and Caesars just offered this one. Even then, the board of Caesars actually has not been that happy with the kind of money which had been spent within this kind of marketing action. So I'm pretty sure that, especially with the markets of Florida not open, Seminole Tribe still holding the monopoly, California, Prop 27 not gone through, Prop 26 has failed as well. And this is something which we always discuss, like, okay, the market will clear out itself. And once again, shout out to the Bet 365, which had been very, very low profile and very quiet in entering the US market. They just, started and working in Ontario, or offering their services in Ontario. And I'm pretty sure that's why they are holding back. They just want to see that the market in the US clears out and cleans out itself, and then they will enter the market. So as of now, it ain't a good market for a startup to actually trying to get some market share.
Absolutely, Nico. And I know that you have a quite interesting chart that you brought today as well. Do you want to talk about that?
Yeah, so the chart we have is it just actually shows, to walk you a little bit. As soon as you start a company, it's usually the friends and family investing into your company. This is when nearly 100% of the shares are still with the initial founders, and then you actually see the bigger the company actually gets, then the founders actually have to give away more money, and this is what's pretty much shown in the graphic. So it just starts with a young child, a newborn, a little baby. Then you are sitting at a table with family and friends, and then you are actually building the company, and you're acquiring more money and giving away more and more share, which actually results into a big skyscraper building where you have a pretty how should we call it, a very diversified pie chart, where actually through the time VC companies, and they usually don't play around, so they're literally take over with respect to guaranteed interest rates. Then another keyword which each and everybody should be aware of is liquidation preference. So the later stage you can actually see, the more money you will raise by external VCs or funds, the more you will have to step back as one of the founding partners, as the VCs usually get a liquidation preference of 1, which means that they are the first to being served. So whatever is left as soon as you literally sell a company, first of all, they are getting guaranteed interest rates, which usually are in the double digits, meaning up from 10%, 12% is quite normal. So they are getting paid back their money, and whatever is left, then they will get their shares. And when they have been pleased, then the overall money will get shared between the original founders. And what's also mentioned within the graphics as well. So it's so you rather hold 17% of a big company, which is represented in the skyscraper, where you have the very diversified pie charts, rather than 100% of nothing. And that's the literally underlying reason why startups are so cash hungry and are specifically looking to onboard more and more money.
Exactly, and this is there's two different strategies here. So either you can remain a founder that owns 100% of your company, and you can strive to grow very slowly and make a small profit and not try to change the world, or as many startups do, which is funding the company by growth. So every second year, you go through a new funding round in order to invest as heavily as you can, and then increase the valuation of the company, and then you go to seek more funding, and you invest that money, and hopefully that will increase the valuation of the company. You can do that until eternity in theory, but the problem is, of course, that when we hit like difficulty in the economy, when access to capital is not easy, then this growth strategy doesn't work anymore, or at least it becomes very risky, or you risk basically raising capital on a much lower valuation. So say that you raised $100 million at a $1 billion valuation in 2021. Well, if you want to raise more capital today, the valuation may only be $200 million. And so you have to give up a lot more of your share capital in order to then raise more money and to stay afloat as an organization. But it's quite interesting. I mean, I can relate to this in our own little journey. Martin, my co-founder, he started our company in 2012, and in 2013, and shortly after I joined as the co-founder. And later down the line, we raised capital. We got our investors into the business, which was Yolo, Lassan, Marsug, and Robin Reed. And then from there, we have raised capital in order to kind of invest into our company. And hopefully one day we'll sit at the top of the skyscraper, but that's a very long time, very long way from now.
At least you're already exploring the market with the skyscraper by doing the iGaming next to New York, and I'm pretty sure each and everybody's looking forward to it in March. So you can already kind of get familiar with the air at the top of a skyscraper, which gets thinner and thinner and thinner.
Exactly. Well, we are at level 1 in the Midtown convene there, so yeah, we've gotten off the ground, I suppose, but there's a long way to go there. But yes, I thank you for the motivation, Nico. I appreciate that. I want to go into the last story of today here, Nico, as well. We can't go through this weekly news without talking about Disney, and without talking about the ever reoccurring question if Disney are ever going to get their feet wet and enter the online sports betting industry through their sports brand ESPN. And Nico, perhaps you want to lead this story a bit. Can you talk a little bit more about the latest news here on Disney, who have just changed CEO?
Yeah, so first of all, and also a good read as well. Bob Iger once released a book about his journey with Disney and how he actually managed to increase the value, which you have already pointed out, from a low double-digit billion company to $250 billion company. So it was quite a ride. So whoever's interested in a good read, just look out for Bob Iger's story about his journey with Disney. So what has happened? So first of all, his twin in the name, Bob Chapek and Bob Iger. Bob Chapek, who was always the driving force since almost more than 1 year with respect to specifically eyeing for the sports betting vertical. As soon as it came down to investor talks, he was openly speaking about, we are eyeing on the sports betting vertical. And then it was like, okay, will they actually buy into a sports betting company? Will they cooperate with a sports betting company? Will they develop it on their own? Then they finally agreed on a deal with DraftKings in early October. And
already it was speculated a deal. It's important to mention that it was a speculation. Yes, never an agreed deal.
Okay. So it was a speculation, but it was never denied by neither DraftKings or Disney that these talks actually have happened. And as of now, with Bob Chapek actually stepping down, if I'm not mistaken, by end of October, so almost 1 month ago, and Bob Iger actually taking over once again, it seems like the overall talks with Disney eyeing on a sports betting vertical have stopped. And that's why there are no news with respect to, okay, how will the cooperation with DraftKings actually work? And that's, as of now, the overall eyeing and getting into the sports betting vertical seems to be on hold or stopped with Iger actually taking over.
Yeah, exactly. So essentially, Jimmy Pitaro, who is the ESPN sports content chairman, he participated in a panel at the sports journal content series here the other day, and basically he got asked the question then, what is the current status of ESPN potential entry into the sports betting vertical? And as you mentioned here, Jimmy made it clear that essentially they are not looking to launch a proprietary offering through ESPN. They are definitely not going to launch their own sportsbook. However, they are absolutely looking for a licensing deal, and they have been talking to not just DraftKings, but as Jimmy put it, he's been talking to all the usual suspects. So we can guess who they are, of course. But so far, no deal has been set, basically. So what they're looking to do is they're looking to license the ESPN brand eventually. So we might expect like an ESPNbet.com operated by, fill in the blank, basically, at some point. This is what Jimmy has confirmed. However, with the installment of Bob Iger, Jimmy has to basically convince Bob Iger that this is a good opportunity for Disney. And Bob Iger isn't just looking at this potential revenue stream from a ESPN point of view, but he's also looking at it from a Disney lens. So how would a licensing deal with an online sportsbook reflect on the Disney brand? That is how Bob Iger will look at this. And Jimmy Pitaro went on to say that he basically spoke to Bob Iger this week. They didn't speak specifically about online sports betting, but Jimmy expects that he will have to kind of walk through this opportunity with Bob Iger so that he understands it. And then, of course, Bob Iger will then take a decision later down the line whether to continue to pursue this potential revenue stream or not. That is the current state of play. And there has been some other speculation here that maybe we'll see down the line even ESPN parting ways from Disney in order to pursue this and other deals that are in the pipeline. Because from ESPN point of view, this is an enormous potential revenue stream. The licensing deal with DraftKings was rumored to be in the billions, right? So it's a lot of money that is on the line here. But again, Bob Iger may look at this from a Disney point of view and say that this does not reflect well on the Disney overall brand. We'll just have to wait and see, essentially. But the discussion has taken a step back, let's say, since the entry of Bob Iger here. So that is that. Nico, thank you so much for today. This has been fantastic, as per usual. It's good to be back here with you, Nico. Always nice to do a nice comeback here, of course. And I want to thank everyone who tuned in here as well today to the Agrimenex Weekly News. It's always great to have you guys here. And Nico, I guess it's time. We head down to the beach. Pina colada.
Exactly. For another pina colada. Another pina colada. Joining Ian Turnbull from the zone, because just getting back to the ESPN and entering the sports betting vertical, I'm pretty sure as soon as the zone bet will actually being launched. As of now, they are just operating on a beta version in the UK. So as soon as they will launch their product, their overall product, maybe this will result in some momentum for ESPN as well, as they pretty much have the same offering already. So we will join Ian Turnbull, who's desperately waiting at the beach for the both of us with 3 glasses of pina colada, and I'm pretty sure he will be happy seeing our faces.
I love it. I love Ian as well. Nico, thank you so much. Everyone for tuning in. Ian, everyone else, Katie, take care, and we'll see you next week. Thank you.
Okay, bye-bye.